Whether you are trading Forex, stocks, or crypto, understanding price action is essential for long-term profitability. A major part of price action trading is candlestick patterns. One popular way of detecting chart patterns is by using the built-in candlestick pattern detection tool on Tradingview. However, there is now actually a far better and completely free way to identify patterns in the market, which detects patterns based on multiple timeframes, filters patterns based on trend, and overlays the detected patterns of higher timeframes directly on the candles. The indicator we are discussing is called HTF Candlestick Pattern, a powerful indicator that surpasses the previous methods built into Tradingview by detecting patterns in real time and combining multiple trend detection tools such as the moving average, directional movement index, and allows for detection on several timeframes to provide a more comprehensive candlestick pattern detection tool. Along with this, the indicator also detects over 25 different patterns, tells you what type of patterns are detected, and this is all in a single indicator, preventing you from cluttering your chart with several indicators for different patterns. Let's add the indicator to our chart. Navigate to the Search tab and search HTF Candlestick Pattern. Select the indicator made by DGTRD and add it to the chart. Let's now take a look at the indicator settings. The first option we have available is for candlestick timeframe. This will allow us to determine what timeframe we would like to use to detect patterns. By default, this is set to weekly. So if we look at the chart, we can see that the indicator draws the weekly candlestick patterns directly over the candles. If we go to the weekly timeframe, we can see the detected pattern here. There is also a label above the pattern to let you know if the detected pattern is bullish or bearish and the name of the pattern that is detected. We will change the time frame being used to detect patterns to the 4-hour time frame so we have more frequent patterns detected. Next, we have options to change the colors of the patterns detected, and right below that we have an option to determine the trend filter method used when detecting patterns. We have two moving averages options, or we can use a directional movement index. If we select the fast SMA option, this will cause the indicator to only display patterns that are relevant to the trend of the simple moving average, where above the SMA is bullish and below is bearish. It is also worth mentioning that if you use either of the moving averages options, you will still see some bearish patterns in a bullish trend and some bullish pattern in a bearish, as it will still try to detect reversals of that trend. Due to this, we would not recommend using this option. Moving on, we also have the option to use a directional movement index. When selected, this will plot a line above the chart to indicate where is an ideal location to seek bullish or bearish patterns. If we add the regular directional movement index to the chart and also change the time frame to the 4-hour, we can see how the trend detections correlates. When green is plotted, this indicates a strong bullish trend and the ADX line is above 25, and when red, this indicates a strong bearish trend and the ADX line is above 25. If the plot is yellow, these areas have a weaker trend. The green and red zones are the ideal areas to seek an entry. Moving on, below that, we have options to change the input of the trend detection tool selected. We can change periods of the moving averages being used, or we can change the ADX threshold line to determine when the trend considered strong. Below that, we have options to disable the trend selection from being displayed and an early warning alert option, which will allow early alerts before a pattern is confirmed. We will keep trend detection mode to directional movement index with default settings, and we will set the time frame being used to a 4-hour time frame. Those are all the changes we need to make. When using the most basic method in order to read the indicator, it means we would enter into a buy position once this bullish pattern is detected on a higher time frame. And if a bearish pattern is detected, you would enter into a bearish position, such as here. However, this is not an ideal method of trading with this indicator and will almost certainly result in losing positions, as candlestick patterns should be combined with your technical analysis to build confluence. Another method involves utilizing the analysis of the higher time frame and entering on a lower time frame to get a higher risk-to-reward trading setup. For example, here we can see we have a bullish pattern detected on the 4-hour time frame. Let's go to the 4-hour time frame and quickly determine the important levels around this pattern. We can see that this bullish pattern was formed on this strong support level here. If you look closely, you can also see that the market has started making higher highs, indicating the market is actually trending in an uptrend on that higher time frame. And if we were to determine a target from the 4-hour timeframe, we can see that this is the most recent swing high where price could potentially reject. Now we can go back to the 5 minutes timeframe and we can wait for a retracement back into this bullish pattern and target the level we highlighted. By waiting for a retracement, we avoid entering at market highs and lows and getting stopped out on retracements. You can use the Fibonacci tool to determine how deep of a retracement you would like to enter from. We personally like the retracement to be above the 23.6% Fibonacci zone for sells and below the 23.6 in a buy. Use any level of the Fibonacci that shows strong rejections in price. We will keep stops below a recent swing low and let the trade run. It is the opposite in a bearish trade. Here we can see a bearish pattern is detected on the 4-hour timeframe. So let's switch to the 4-hour timeframe and determine our target level. We will now go back to a lower timeframe. Wait for a retracement. Set stops above swing high and target the level from the 4-hour timeframe. Now let's see how the trade plays out. There are many ways of utilizing this indicator, and you can always create your own strategy and use your preferred timeframe. However, in order to truly utilize this indicator to its fullest potential, we will need to add another indicator to the chart to cover further aspects of the market not covered in this indicator to have a profitable system. But before that, if you are enjoying the video, don't forget to like and subscribe to not miss out on future content. And if you would like to try the #1 premium indicator on Tradingview by xauusd risk-free for 30 days, you can use the link in the video description. Your continued support really helps the channel. The indicator we will be adding is a volume indicator. Click the indicator search tab and search volume flow V3. It's this one by this user. Select the indicator to add it to the chart. Let's make some adjustments to the settings of the indicator to optimize it for the strategy. And we want to increase the moving average being used to 200. This will allow us to have a better idea of the volume metric from a higher time frame by accounting for more candles. 200 means that it will use the last 200 candles in the calculation. Now go over to the Style tab and we want to disable everything except the difference value. This indicator will plot the trend of the difference between buying and selling volume in the market to let us know if volume is trending bullish or bearish. This will allow us to ensure that when we are entering positions, the majority of volume is also aligned with our trade idea. If we go back to the HTF candlestick pattern indicator, we can see that we are still using the settings we selected earlier. Now that we have a trend detection indicator, a pattern detecting filter, and a volume filter, here is the strategy. Ensure you are on a 5-minute time frame. For buy positions, first we want to ensure that we are in a strong bullish zone, determined by the Directional Movement Index filter, or DMI, at the top of the chart. Next, we want to ensure we have bullish volume determined by the volume flow indicator at the bottom of the chart. Next, we want an indecision or bullish pattern to be detected, which we can determine by hovering the cursor over the candle pattern label. If a bullish pattern is detected, we want to wait for price to retrace into that pattern. Once this happens, if the volume is still bullish, we will execute a buy with stops at a recent swing low and target an attractive 1-to-2 risk-to-reward ratio. Just like that. If an indecision candle pattern is detected, we need to wait for the high of the pattern to be broken, indicating the trend is going bullish. Then we can execute with stops below swing low and target 1-to-2 risk-to-reward ratio. For sell positions, it is the opposite. We want to ensure that the trend is strong bearish. Then we want to also ensure that the volume is bearish. Once that is confirmed, we need a bearish pattern or indecision pattern. If a bearish pattern is detected, we will wait for a retracement into the pattern. Set stops at recent swing high and target a 1-to-2 risk to reward. If an indecision candle is detected, we will wait for price to break the low of the indecision candle, and if the volume is still bearish, we will execute with stop at recent swing high and target a 1-to-2 risk-reward ratio. If an indecision candle is detected, it is important to note that these patterns have a lower win rate percentage. As a result, we would recommend lowering your risk if entering off of an indecision candle, and in turn increasing your risk if entering based on a confirmed bullish or bearish candlestick pattern. You might also notice, due to the filtering from a higher time frame, this strategy does not provide many signals, and as a result it's ideal to be used on multiple assets in order to get more frequent trades. If you don't want to account for multiple assets and you would just like more frequent trades on a single asset, you can try to use another trend filtering method that will allow for more executions. A method we like to use involves using the swing structure detection on the price action concepts indicator by xauusd. This indicator will detect market structure based on a user's selected timeframe with alerts and allow you to simply trade candlestick patterns detected in the overall trend as shown here. We hope you enjoyed this video on the free HTF candlestick pattern detection indicator. Feel free to explore using this indicator and let us know what strategies you were able to develop and test. Also remember, if you would like to gain access to the price action concepts indicator by xauusd, you can use the link in the video description to gain access for 30 days risk-free, where you'll also receive the oscillator matrix and the signals and overlays indicator. Thank you for watching. Don't forget to like and subscribe, and we will see you again next time.